Dave, what's up, man? Welcome to the SABM podcast.
Thanks for having me, Scott.
Yeah, man, fresh off the first acquisitions and exit circle meeting in 10X Vet. So I don't know if you scheduled this for the same day, just because it would be we get to spend a lot of time together, or if it was just a coincidence.
I I think some things happen and they're unplanned in life, right?
Yeah. Well, hey man, it's been good connecting with you, I guess through 10X Vets and thank you for being a part of that group and then just getting to know you over the last few months. But maybe just to kick things off, you're in the business acquisition space, not just like, hey, I'm interested in this and that sort of thing, but you come to the table with investors, you come to the table with due diligence, you are an investor and have a great perspective. I just remember just a quick story and then we'll get started, but there was somebody that was looking to buy a laundromat business. I don't know, remember even who that was.
Yeah,
you know,
yeah, right.
and then and then I think it was right after you first had joined 10X Vets and you didn't even like know the guy. I mean, maybe we made an intro or something, but you sent back like this report, like this whole like like long report. I think on why the person shouldn't move forward with that acquisition, but we looked at that. I don't know, me and Bill like read your email and we're like, dude, Dave is legit, man. So
Yeah.
you got earned some street credit that day.
Oh, thank you, thank you. Well, like it's all about doing due diligence, right, of the market. And I remember that email in that email. I just documented line by line like everything I did when I was looking into laundromats. Like, hey, how do we pivot this B2C type of entity, right? And roll them up and pivot it to B2B type of
Oh,
mega business, right? And that's the overall thinking and strategy. But then I smiled and dialed like 400 laundromats, right, in the DFW area, and I ultimately decided, nah, this is not the right play,
yeah.
right? Or and not saying that it's not feasible, right? You definitely can do it, but that's the approach, right? That's the approach for every business that we invest in or partner with, right? We gotta look through the cracks, right, and do our squeaky due diligence here, you know?
Yeah. Yeah. So, anyways, man, that was just something that, was memorable to me and it's been great having you in the group. But let's start off with, maybe at a high level, what you do. Your company is called Phalanx Partners. And so maybe just introduce yourself and share what it is that you do as it relates to business acquisitions.
Yeah, sure. So let's start with where I came from, I guess,
Okay.
like
Yeah.
2011 Air Force Academy grad and commissioned as a contracting officer. Spent my time uh private industry facing, right? And brokered these little project deals, right, between these units on base with these small businesses. And that was my really first foray and introduction to this world of small businesses. I mean, sometimes I would look at these guys, right? And it's like, oh my God, how are these guys are really profitable, right? And it's like, oh, the snow removal guys, right, on base, you know? You wouldn't think off the bat, right? It's 2011, Shark Tank's going crazy on NBC Studios. Everyone's like, oh yeah, let's do a startup and all this craziness, right? But these boring businesses out in plain sight, they're really profitable, right? Um, and I mean, I'm just so grateful for my time in the service, and I picked the right um career field in AFSC that gave me exposure to that, right? And I guess you can always argue that I guess I was already exposed to that because coming from a Vietnamese American family, mom was uh hustling in nail salons, right? Like
Oh, yeah.
those things are so profitable for no good reason. Don't even ask me why and how, right? I don't get it. Um, but that's just the reality of it, right? With certain small businesses and certain categories. that's just how it is. You know, and um having on active duty, right? I was exposed to IT equipment providers and servicers, to construction businesses, to medical services, to at the end of my time in on active duty, I was at the General Atomics factory, right, in a windowless office where we're, pumping out these MQ-9s, right? And in San Diego, as the lone Air Force officer, by the way, it's your turf and your people's turf, Scott. Um, but that experience really helped set the ground stage for what I do today, right? It's similar, right? Doing due diligence. We always do due diligence as contracting officers, but I do the same due diligence level, but if not even deeper due diligence, because my money's on the line nowadays,
Yeah.
right? It's not the government's money, it's my money, right? Um, and there's many ways to invest in small businesses, right? You can be an LP, right? You just park your dollars and collect your dividends. You can be the GP, right? Similar to real estate, be the GP, be the project sponsor, raise the capital, and park, a good chunk of your own capital, um, and help that business grow from this 1 or 2 million EBITDA level to 4 or 5 or even 6 or beyond, right? But in order for that to happen, right, that there are certain levers that need to be pulled, right, pre or post acquisition, and that's the value, I think, of being in the 10x Vets group and in the acquisition circle, right? Shameless plug here. I think it's a lot of private deals that happen. They happen because of trust as well, right? And I think that veterans do generally like to work with each other, right? And I'm the type of guy who will never BS a fellow veteran in small business, right? I'll tell them, hey, this capital provider is the right guy, right, for what we're looking for and looking to do. This is not the right capital provider. They don't have the right background. They don't have the right portfolio companies to be, synergistic to your current business, right? So I mean, it's all about being a value add to the owner and to the business asset at the end of the day. So that way, that owner can really experience an outsized gain and exit at the tail end of the 5 or 7 years we're in there with them.
Yeah, so it sounds like what you're saying is that, not all money is equal. And so, if there's so what do you think, so based on the relationships that you've built over the years with investors, with deals that you've looked at over the years, and maybe businesses that you might really like where do you see the opportunity right now? If somebody's out like looking, I mean, is it, or is that just like kind of a too open-ended of a question, based on like, if somebody is, trying to expand by buying a competitor, and they already have an existing business, that's different than somebody just kind of that's new to the game, that's looking to buy an acquisition, purchase a small business, and that's their first business. So I guess
Yeah.
where do you see the opportunity right now?
Yeah, yeah. So I think there's always opportunity, right? But in this period of time, there's a lot of baby boomers trying to exit their businesses, right? And so if you already have a business already, and they don't want to stick around, hey, perfect, right? Let's be that solution provider for that maybe friendly competitor business, right? That falls in the same category. And I mean, I think that in terms of to really answer your question, right, of where the opportunities are, I the way I view the landscape of businesses, right, is by EBITDA size, right, and
Mm.
industries. So if you're looking at the $10 million EBITDA level, right, the multiples are so high that, and the operational improvements are going to be limited, right? Whereas if you drop down to 1, 2, 3 million EBITDA level, right? There the valuation drops substantially, right? The multiple drops substantially. And there lies in the opportunity to go expand, right? And there's when you're trying to acquire that second or third business, you should acquire based on um, some set of it, purpose and reasoning. Like, are you driving down costs, right? So you're potentially buying a supplier in that sense, right?
Hmm.
Are you expanding the client base? Are you maybe buying an adjacent business, right, to sell or cross sell, right, or upsell, right, your current product or service offering, right? Because if you have two businesses, right, and you're selling to the same client segment, okay, uh, and you acquire that second one, you sell your products or services, there's a 70% chance that they'll bite off on that, right? And there's, and in reverse, right? Well, you know, there's a 70% chance that that second business and that their products and services could complement your current client base. That's awesome if you can
Yeah.
cross sell, right? And now you've accomplished a strategic objective, right? And it's not just buying for the sake of buying, you know. I mean these are just a few examples of what we're looking for when we're executing that follow-on acquisition, right? Sometimes it's okay, technicians, right? The technician labor market is constrained, right? Because there's too many people in this country with all these degrees, not enough people in the trades, right? And so one solution to um to growing, right, is to, well, acquire someone in a nearby territory with good technicians, right? And then boom, you've expanded your workforce and the accounts.
Yeah. Yeah. So it sounds like almost you have to take an inventory of like what your strengths are and kind of what you bring to the table. And if you can find an acquisition to make where you your strengths complement each other, it sounds like that's definitely a win-win. And then even I guess if it's your first acquisitions, like you as a person, like what strengths do
Absolutely.
you have as a person, right? That where you can come in and really create real value in this company.
Yeah, absolutely. I think if it's your first acquisition, right, you have to think about, because it gets so personal on this lower level, right? You have to think about, okay, you came from the defense industry. Did you end up working in some other industry or some other function where you can really take your experiences and skills and unlock some growth, right, from day one? Um, I think that's a really good way to think about things. Um, there's the Stanford Search Fund study, right? And they say like, oh, stay away from manufacturing businesses. Well, okay, but what if there's, some professional engineer, some licensed professional engineer who used to be a nuclear submariner, right? Or some mechanical engineer coming out of a service academy, and all you did was, you were a maintenance officer, you worked on these these aircraft, right? Uh, what parts are expendable, right? You know what what the demand is, right? And why not, right? I mean, these broad statements, these broad studies, right, are just averages out there, right? And sometimes it doesn't account for you, the personal you, right? And I think it's always important to think about your core, right? Whether it's on the business level or your personal level.
Yeah. What and how about some of the pitfalls? So we talked about, some of the opportunities and ways that, an acquisition, where you might be able to create value. Like what are some of the pitfalls that you've seen or some things that some deals you may have walked away from or common mistakes that people make in
Well,
the acquisition space? Or maybe one
well,
that you made. I don't
well,
know.
I've walked away from a lot of businesses, right? There, you vet a lot, right? And there's a lot of ineligible businesses than there are eligible businesses to acquire or invest in. Um, you know, uh, I guess like one of them's like owner dependency, right? Okay, well, um, if the owner were not here, would I be able to run this, right? So it could be one of those businesses where it's overly technical, right? Oh, not good. Um, there's, sometimes sometimes you get under LOI, right? You're marching towards a closing, but then the owner is not ready to sell. So it's all mental, all right?
Mm.
It's they're about to sign, but they want to back out because they don't know what to do next, right? With their lives, right? Because they spent 30 years building this business, that's all they know, and they get so emotional about it. Um, that you spend all these resources to the finish line, but oh, last minute, no. So deals die all the time, right? Is what I'm trying to say. I mean, I'll give you other examples where, I mean, uh, sometimes some of these businesses don't have the cleanest of books, right? And then you dive deeper, you talk through the financials, and you find out that the owner is doing something funny, or they might have a side entity that may not be disclosed. And I don't want to say that to, you know, spook everyone from going down the path of either buying their initial business or their second business, right, to bolt on. But that's why we have a due diligence checklist, a very long one.
Yeah, yeah, and I'm sure every business has. I mean, owners pay themselves different ways, and I think just obviously, the more transparent they probably are about like, hey, listen, like this line item, this is whatever the nuance might be, and then you can really understand what is the real profitability of this business, if the owner wasn't here, right? So I think, but if they don't openly disclose that or whatever, then it's you know, um, you gotta, I guess, kind of figure it out yourself.
Yeah, sometimes you'll see these entities, there's actually three or four entities involved, right? And you can't even allocate the line item cost to any entity. You're like, where is this coming from, right? And sometimes they're running expenses through personal expenses through the business. And then there's too many add backs, right? When you see too many add backs, to figure out what the normalized number is, right, for sellers' discretionary earnings or EBITDA if it's a bigger business. Um, Sometimes it gets too much, and you just have to walk away and just kill the deal right now and move on because it's too hairy. You can't allocate your limited amount of time looking into this thing, right?
Yeah.
And the smaller the business is, the riskier it is because everyone's running. I mean, it's so messy. It's very, very messy in terms of the
Yeah,
financials.
yeah, I can imagine. And what's your secret to success for finding deals, like finding deal flow? Is it like, hey, you're looking for, um, like you're out there like looking for these businesses, or are people bringing, uh, or is it maybe somebody that's looking to make an acquisition and then you find opportunities kind of through people that are making acquisitions for like how do you find deal flow, or is it kind of a
Yeah, yeah.
combination of
It's well for the LP deals, right? I think there are a lot of veterans who do know each other, who are in the ETA space, right? The self-funded search space, right? And they'll we all talk to each other, right? And that's the cool part about being a veteran, right? Yeah. I feel sometimes the veterans network reaches even further than any of these like institutional business school networks, to be frank with you. And then
yeah,
there's also built-in trust, right? We want to see each other succeed. So that's one way, right? Um, the other way that I find deal flow is through referrals. It's purely referrals, right? And if I could, give some advice to a transitioning veteran, right, who's just starting out, I think I mean I reflect on my time in grad school, right? And I'm not saying grad school is the end all be all, right? Because it might not be, right? You can recreate the benefits of it without going. Say if you don't have the GI Bill, right? Like, do you really want to fork up 200,000 bucks? I don't know. Maybe not, right? You can always go out, talk to different people, just go to your local bar, right? And talk to some professionals, right? And plug in and start building out your professional network outside of the military, right? Um, and talk to people and understand what they do in their lives, right? Whether, in their professional lives, right? And see and understand how they're growing their company, right? At a larger level or a middle market level, whatever. It doesn't matter. But that's how you grow your professional network. It's just getting out there and making friends. And I think a lot of veterans are actually good at that because every 3 years you move, so you got to make new friends, right? So
Yeah.
so you just got to apply that to life, right? And get out there. Um, yeah, that's how I, you know, generate deal flow. I just make friends.
Yeah, so networking, and then are there particular types of people that are make the best referral partners, or like who would be some strategic partners that, if somebody's looking to make an acquisition, like who should they build relationships with immediately?
Yeah, I think local small business attorneys could be a good referral source, right? Um, uh, local outsource accounting firms, right? They could be good referral sources. Wealth managers potentially, and any other potential service provider uh, within your target industry, right? So sometimes the sales guys, right, who sell software to, whatever industry niche you're going after, those could be really valuable contacts. And I mean, for me, right, I want to go serve that owner. And so if there's an outsourced branding strategist guy, right, that that's helping that business grow, and these things come in naturally, right, for
Yeah.
me. And sometimes these small business advisors and business coaches, right? They realize, oh, hey, the client business owner is at 50 years, right? 50 years old. They've got another 5, 10 years left, right? They want to get a mega injection of equity and grow, right? And maybe also at the same time take some chips off the table, right? Those are good. That's a good profile
Yeah.
to partner up with.
And that's where you guys come in, right? So I know
Yeah.
maybe we could talk about your model for a little bit, but I don't, from what I understand, you don't just kind of write a check and then go hit the beach and, say, hey guys, let me know, uh, let me know when you're ready to sell
No.
this thing.
Yeah, no, no, no. Basically, we take some chips off the table for the owner, right? 70, 80%, right? So that leaves them with 20 or 30% of equity, right? And the goal, right, is to grow that 20, 30% to substantially more than the total value of the business today,
Mm,
right? Leveraging our relationships within, the aerospace defense industry or the government, right? Or some other industry we may be tied to through our um, yeah, through our relationships that we've built over the years. Um, but remember, right, at this level of the market, it's all about adding value as an investor. We can't just sit on the board and sip our tea and coffee with our pinkies out. We have to parachute in there and help that owner, whether that's, you know, implementing a new ERP system, figuring out how to get manuals in place, helping them set up a process for hiring, right? Just opening up new channels and ways of doing things. Um, so that they can really grow, right? And then also sitting in there, okay, and acting as their fractional corporate development team, right? Running, doing all the research that a larger entity would be doing, but it's just me and my partner and an intern, right? Doing all this, right? So we're driving like a ton of value that, you know, into a level of the market that's quite frankly underserved, you know? Um, I mean, smiling and dialing 400 uh laundromats, right? Well, if someone we could recreate that, and well, if someone has a, I don't know, an aerospace parts distribution business, right? If need be, and serious market research, diligence, um needs to happen, then we'll do it. We'll do it for them. We'll come up with the right questions to ask, and then figure out what targets are in the space that are eligible, and work with their fractional CFO or accountant to find a way to grow, and maybe drive down costs or achieve some other greater strategic business goal.
Yeah, and it's probably a breath of fresh air for for the business owner that is looking to take some chips off the table, but not necessarily just want to walk away, today, So I think it's probably, nice having this team of these younger guys that are, with a lot of experience and connections, that bring a competitive advantage, come and help. Like, hey, yeah. So I'm not 100%, owning this business, and I'm going to take, some of that process or some of that, the value that I've created over the years and cash out of
Right.
70 to 80%, put that in the bank or invest it or whatever. But I'm going to stay in this thing. But now I've got this team that I can leverage that's going to really help us get it to the next level, which they probably want to do anyway, since they started it. It's like, hey, maybe they've hit a ceiling and they're bored or they're stuck or they're just getting a little bit, they would just rather do the thing that that they do best and enjoy most. And then you might be able to come in with some ideas and partnerships or team members that could help this person, scale even further while de-risking their investment because they cashed out of, 70 to 80% of it.
Yeah, yeah, absolutely. I mean, I'll give you an example of my time sourcing in the field, right? I found this pet resort out in the middle of nowhere, that was doing pretty well, right? Pet resorts are great. Why? Because well, there's recurring revenue. And even during like the diligence phase, I was there as an undercover buyer, right? And a free consultant pretty much, and helping them build out a pricing chart that's legible to the customers, right? And I was observing things, right? Like within 3 days, I knew what to do, right? To optimize the revenue for the owner, right? There were a few, that particular owner definitely needed a business coach as well, right? Because the employees were scared and they'd like scurry off and hide from the owner. It's like, oh man, that's not good, right? Um, but there's so many ways to improve these operations, right? And as ex-military officers, we're I mean, we're really good, whether you realize it or not, at optimizing things, right? And
Yeah.
it's like taking over another military unit. Okay. And I think that is this idea of, oh yeah, start something from scratch. Yeah, that could work for some people, right? But coming out of the service academy, we've been trained, we've been programmed a certain way, right? And I think this is a little bit more conducive, right? Buying a business or, you know, um, executing optimization problems, right? That's because that's
Yeah.
what it is.
Yeah, and you don't have to invent the product. Like the product already exists. There's already customers, and I feel like a blast of energy. Like if I, no matter what the business is, like just kind of going into a situation, and if there was a way to make money by just optimizing it and just using common sense or leveraging technology, or hey, your employees are afraid of you. Like let's all gather around the table and figure this out, right? I
Yeah.
think that's what a lot of veterans are good at. just by nature. What would you say? Is there a common theme or a common thread with like the typical small to medium sized business owner of what they're really good at, or is it just like a whole bunch of it's all over the place? Like when you look at these, when you talk with these owners, it's like, man, they're usually always pretty good at this one thing. Like, is there a one thing, or is
They're good
that
at sell. I think they're pretty darn good at selling,
hmm
right? They're good at selling. And so they've risen to the level that they're at, right? Um, and but also, right, to go from 0 to 1, that's one skill set, but to go from 1 to like 10, right, that's a different skill set. That's where you sort of need to have more structured managerial skills to take it to the next level. And that's why, if you look at startups, um, there's a certain point where the founding entrepreneur always gets fired, right?
Oh.
It's because that skill set, right, is not, it's good for starting from the ground up, but at a certain point, to really grow it to the next level, it just requires a different mindset. And
Hmm.
and 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 you'd be surprised how, you know, this inheriting like messed up squadrons or battalions or what have you. That experience is really good for the latter situation, right? Of optimizing growth.
Yeah, so it sounds
Much,
like
much more so than the former.
gotcha. So it sounds like they're good at sales. They're probably the people that took it from 0 to 1,
Hmm.
and they know what that was like to go from 0 to 1 and then maybe even 1 to 10, right? And then,
Right.
you kind of offer the 10 to 100,
Yeah.
value proposition.
Yeah, and it's all about partner being a thought partner as well. And sometimes that they don't sometimes these small business owners get sucked down into the weeds so much that they can't come up for air, right? And look at the bigger picture, right?
Mm,
Um, and that's where we could come in and help and
yeah.
and be their confidant as well, right? Because it's lonely at the top, right? Because you can't really talk to your employees, right? And sometimes they're not the right people to even talk to, right? They're not thinking like bigger picture. Let's go to like 100 million in revenue. That they're not the right people to talk to, you know? Um, and we, I mean, everyone can call and cry on my shoulder if they need to, right? And complain, you know, if they if they want, because I mean, we are like an outlet, right? Sometimes we're a stress ball to some of our,
Yeah,
so
a therapist.
we're sometimes a therapist, I feel like.
Cool. Yeah, and so what would you say? So looking out, over the next, I mean, we're recording this end of June. Uh, what are some of your goals, maybe just short-term goals that you want to accomplish, over the next 90 days or by the end of the year? And then what's kind of like your moonshot goal if you had to look out over the horizon, 3, 5, 7, 10 years from now, what are you really shooting for?
Yeah, I mean, short-term goals, I want to partner with one great business and get it ready, or maybe it's even ready. It's ready for to receive some institutional capital, right? And would love to be that private capital partner and be that advisor to them, and help them grow that minority stake into something insane. Well, while they're also getting a big payday in the upfront. Um, I think if I could get that done specifically with a veteran-owned small business, but not exclusively, right? I think that would be awesome to do that. Um, but moonshot goal, 5 years from now, love to do five of these deals, right?
Okay.
Uh, and maybe by then I'll have one exit and a good exit where I've made one owner very, very, very happy. Like their bank account will thank me.
Yeah, and
type of deal.
yeah, they may want to invest in some more deals, right? They're like, "Hey, Dave, like this was you took me through the process. We 3x or 5x or whatever, 10x, whatever the number is, and then they become like a limited partner, and they're like, or I don't know, man. Like you could grow this into a whole ecosystem of people just kind of play the role that they want to play, based on where they're at in life, based on their resources, and and they understand your model because they went through it.
Well, actually, it's not uncommon to have some owner who's ridden that wave up with some private capital group, and then they join the capital group because they're bored, right? Because usually an owner who's willing to hustle like that, they just want to stay in motion. They'll I've seen some owners they sold their business 3 months later. They're so bored in Florida. They're bored, right? And they're like, oh God, I got to go find something else to do. And then guess what? They start investing in these things again, you know. And so I mean, it's not uncommon to see these owners who've ridden the wave up with a group, and then they are a part of that group as an LP and as an industry advisor, industry expert, right? Sometimes they'll go
Yeah.
by, you know. Um, EIRs, right? Entrepreneurs in residence, right? So they've had a mega exit already. So they're coaching the next generation and go after it. And then they open up, they bring their relationships too, right? Yeah.
Yeah.
And
Yeah.
it's just this self-licking ice cream cone thing, right? The more deals you do, all right, and take care of these owners, the more will come back, right? It's quite remarkable seeing some of my peers who've been around the block for what 5 or 6 years. They've got a mega team, right? And some of them at a certain point they want to go get an SBIC license, right? Be a lower mid-market PE fund. Some of them just stick to the deal by deal model, right? And they enjoy that better. And to be frank, deal by deal, uh, is better for the owner and the business in the long run because
Hmm.
we're incentivized by performance. We're not incentivized by the assets under management like a fund would be, right? I'm not saying that there's anything wrong with that. I'm just saying that's just how the incentives are set up. And right now, a lot of these lower mid-market PE funds, family offices, and whatnot, right? Remember, they are confined by heads, they're confined by industry expertise, right? And that's why we are a solution to the back end as well, right? We're a solution to the owner, we're a solution to the LPs as well. And when that there's an intersection of that, that's when a deal happens, right? That's when there's alignment on both sides.
Absolutely. All right, Dave. Well, yeah, man, I'm so glad that we connected a little while back, and I'm excited for this acquisitions and exit circle too. I don't know if you want to talk a little bit about that, but like we had our first kickoff call today, this afternoon or earlier this morning, later this 11 a.m. This morning, and I don't know, man. It felt like there was a lot of energy on the call, and I was just, from the service providers that were there that, oh, we help people implement EOS to the M&A attorneys, to you, to the business coaches, to the financial advisors, to the business owners who were looking to, buy a new business. It was pretty exciting. So I don't know what your take was or what what you walked away with, but I don't know. I kind of felt like, man, I feel like there's some money to be made here for everyone.
Yeah, yeah, absolutely. I think the service providers can help facilitate some um either referrals or maybe some they'll get some business out of this as well, right? But at the end of the day, it's all about providing value and driving growth for that owner, right?
Mhm.
And I think yeah, that circle is going to be great. It's going to be a great experience for everyone. I'm going to leverage all my capital relationships and try to figure out how to help some of the owners who are in the group, some other maybe veteran-owned small businesses out there grow and work together with the members of our group, and everyone wins, right? Because at the end of the day, that's what we want. We want everyone to win.
Everybody wins. There we go. So, well, thank you for helping to lead that, and really excited for the direction. that's going to go. So what's the best way for people to reach out and get in touch with you and learn a little bit more about what you do?
Yeah, I'm active on LinkedIn, so definitely friend me on LinkedIn and shoot me a message or send me an email at dave.lamb@phalanxpart.com.
All right.
Partners was taken by phalanxpartners.com was taken by a defunct venture capital group. So
Oh.
we had to chop off some letters.
All right. Well, we'll link to your website and your LinkedIn profile in the show notes so that people can reach out and connect with you there. And hey, man, thanks for being a guest on the podcast today. And here's to an awesome finish to 2025.
Yeah, thank you, Scott.